Hi everyone, welcome to the channel. Today we're going to be looking at the company Nvidia, ticker NVDA. This company has been in the news throughout the year as the stock has been up as much as 200% during this time. But with the recent stock price drop, it's up about 175%. As this company has seen explosive growth in their data center market, which includes AI, cloud, and enterprise computing, to name a few sub-segments. In this video, we'll look at their financials, perform a stock valuation, and at the end, use computer modeling to forecast the 52-week stock movement. But first, we'll look at NVIDIA's recent quarterly trends that they released. So let's jump right into it. So this is NVIDIA's revenue trend that they provide during their earnings call. And this goes back the most recent 8 quarters. And we can see here for the top row data center, it has had the significant growth of the most recent 2 quarters. So going back to Q1 of this year, it was just over 4 billion, and we can see it's jumped up more than doubling to just over 10 billion. And then the most recent quarter going up to 14.5 billion, which is a triple from Q1 and a 50% gain from Q2. So the significant growth in this data center is what's helped fueling the stock price movement, jumping up to the high $400, $60 range, and actually hitting $500 a few weeks ago. So the data center market is what helped kickstart this uptick in the stock price, helped fueled by the AI trend and also enterprise computing and cloud computing. But let's look at some of the other segments here. And we see for all these other segments, though, they're actually down from their all-time highs. So gaming, 2.4 billion Q2, 2.8 billion in Q3. But their highs were back in 2022, 2023, where it was over 3 billion. And professional visualization, we can see about 300, almost 400 million here, and just over 400 million for the past 2 quarters. But it was as high as 600 million again back 7-8 quarters ago. Auto, same thing. It's not the past 2 quarters. It's not the highest. 250 million, 260 million for the previous 2 quarters, but it was approaching 300 million back in Q4 of 23 and Q1 of this year. And then OEM and other, significant drop off here for the past 2 quarters, 66 million and 73 million. However, when we go back those 7-8 quarters, we can see it was approaching 200 million back in Q4 of 2022 and 158 million back in Q1. So more than a 50% decline since those highs. So the data center market is really holding everything up. Even though they had these declines in the other segments, the growth in data center significantly outweighs any of these declines. So if you're going to be optimistic on the outlook, I feel, for NVIDIA, you really got to believe that this data center growth will continue. And maybe they regain some of these revenue losses that they've seen in the other market segments. But let's move on and we'll take a closer look at their financials. Looking at their financials now, I'll point out this far right-hand column. This is the trailing 12 months, so taking into account Q1 to Q3 of this year and Q4 of last year. So look at the revenue first, and we can see over the past 10 years, it's pretty much been steadily growing with only one down year in 2020. Probably had to do with COVID, but even that one down year was only down slightly. Then moving on to net income, again, generally increasing, and we can see trailing 12 months, a significant jump to almost 19 billion, which is significantly higher than the prior year, which was actually lower. But even the prior year, 2022, it's looks like it's pretty much doubled that. So a great growth there in net income. And then earnings per share, again, growing nicely, just like the net income and revenue. Currently $7.58 for the trailing 12 months. And we can see back 10 years ago, it was at 28 cents. So significant growth there over this time. Dividends, we could see NVIDIA was increasing their dividends each year, but over the past several years, it's leveled off. Maybe because they seen greater opportunity with investing that money internally. And then shares, a little mixed here. 10 years ago, 2.2 billion, and we can see it's actually up slightly, 2.5 billion for the trailing 12 months. However, it is lower than some prior years, 2021 and 2022. And then book value per share, we can see slightly down, but prior to that, it was growing nicely over the prior several years. And then free cash flow, big jump here, trailing 12 months, 17.5 billion, significantly outperforming every other year. And they only had one decline year over the past 10, which was last year. But we can see the 17.5 billion more than doubling the next highest back in 2022. So overall, great data points here. We can see significant growth, especially over this trailing 12 months, which has helped that stock price make that big jump. As I mentioned, during this year, it's been up as much as 200%, currently up about 175%. Going down a little lower, net profit margin. So I typically like seeing companies over 10%. You can see here they far exceed that, especially most recently, even trailing 12 months, 16%, but prior to that, over 20%, and even in that 30% range. And we have to go back to 2017 to get back down to somewhere around 10%. And another data point I like looking at here is return on equity. Now, Nvidia is in the semiconductor and semiconductor equipment industries. So semiconductors average around 22%, while semiconductor equipment is quite higher at 46%. So they're somewhere in between those. And we can see here at times they have been in that 20% range, and then also in that mid to high 40% range, and trailing 12 months significantly higher, 85%. So overall, I think that return on equity still looks good, but we're going to scroll down a little bit further and look at some other data points on a graph. So on this graph here for these per share values, what I want to see is everything moving up and to the right, showing a nice growth trend. And the first one in white, revenue per share. We can see back in 2015 around $2 and currently up around $18. So a nice growth, and we can see that it had a big jump over the trailing 12 months due to that performance in their data center. And then book value per share, you can see it has been growing starting again back in 2015 around $2 and actually ticking up nicely to about $10 in 2022. But having that slight decline over the past year slash trailing 12 months. However, moving back over to the yellow in free cash flow, and we see that has been trending up nicely. And same thing as the revenue per share. It has this big uptick over the trailing 12 months due to that performance in data centers. And then earnings per share, as we discussed a few minutes ago, it was had a nice growth over the same time period. You can see quite low. It was probably, I believe, around 30 cents, maybe 50 cents a share. And we can see it has grown to most recently up around $8 per share, again, with that significant jump over the trailing 12 months. And then dividends down at the bottom. I know it's hard to see just because they had a low dividend payment back in 2015. It was, I believe, somewhere around 15 cents, and it was upticking out until 2019, where it got up to about 16 cents, but then it's leveled off. And they're probably using that money to invest internally as opposed to increasing their dividend. But now let's move on and we'll actually perform the stock valuation. So for the valuation of NVIDIA, you see I have an intrinsic value of basically $105, and that's using a 20% growth rate over the next 10 years and a discount rate of 10%. Now, my long-term growth rate for this is 3%, and then I taken into account a 90% margin of safety. That brings the valuation down to about $95. Now, currently, Nvidia is trading around $465, $470 range. And if I'm going to be a little more aggressive or a little more optimistic for Nvidia, I will change that long-term growth rate to 5%, and we'll see how that impacts the valuation. So with the long-term growth rate changed to 5%, we can see the intrinsic value jumps up to $136, and with the margin of safety, just under $123. So if I was going to look at buying Nvidia, that's kind of the price range I look at, somewhere between $95 to $123. but potentially going up to that full valuation at 136, depending on what's going on in the market. Now, the stock price is trading, as I mentioned, in that high $460 range, $470 range. So let's change some of these valuations around to see how we can actually get to that price point. So first, I'm going to change that long-term growth rate back down to 3%, and then we'll look at the short-term growth rate. With the short-term growth rate back down to 3%, we can see back to the intrinsic value at 105 and the margin of safety to just under $95. Now, over here, the net income CAGR over the last 10 years has been just over 45%. And to really believe that they're going to perform at this rate for another 10 years, that is a very bullish outlook. But I'm going to look at a growth rate of, let's just say, 40% over the next 10 years. Still extremely bullish, very optimistic on this company. You got to believe that they're going to continue growing that data center market and improving those other markets that had showed those declines as we looked at a few minutes ago. We can see with the 40% growth rate, the intrinsic value jumps up to almost $490, and with the margin of safety comes down to $440. So now we're in that range of where it's currently trading in the high 460s, 470s. But for me, I just can't be this optimistic on the outlook for Nvidia. Yes, it's a company in a growth spurt currently, but to believe they're going to be able to grow at 40% a year over the next 10 years, I would have to be extremely bullish on this company. And unfortunately, I'm not at that point. And this gives very little margin if anything goes wrong and the stock drops. So, though I would like to own Nvidia, I just can't see myself buying in at these prices. But let's look at some other financial data points. And first one we look at is return on invested capital. Typically I like to see companies over 10%. And we can see during these time periods, they've exceeded that. Most of the time they've been over 20%. Earnings per share over 10%, except for the 5-year, which is slightly under at 7.5. But then this year over year going into the trailing 12 months, extraordinary jump over 300%. And same thing for the growth rate here, averaging over 20%. But then this trailing 12 months compared to the prior year, 66%. And same thing with the free cash flow per share, as we saw a few moments ago as well. Very high growth here. We can see these at least 40%, and then the trailing 12 months over the prior year over 300%. So very good data points there. Let's scroll down a little bit, look at a few others. So right here, the PE ratio, very high, 61. So again, as I mentioned, you got to be very optimistic if you believe that NVIDIA is going to have this strong growth to continue for another 10 years. Unfortunately, it's just too optimistic for me to buy into Nvidia. But long-term debt to free cash flow, very low. I like to see under 3. You can see they're 0.55, so they don't carry a lot of debt to their free cash. Dividends, yeah, that's up 88%, but we know it's been flat over the past several years. But it is up from 10 years ago. Share count has actually gone up from 10 years ago, up 11%. And the net profit margins, as we discussed a few minutes ago, the average over the 10 years, 23%, and the past 3 years, just over 26%. All right, let's jump in and look at the computer modeling to forecast the 52-week stock movement. So in computer modeling software, I already ran the analysis using 2 methods. First, the M5 rule shown here, and the other random forest. And this is as of actually November 30th. I know it says the 27th, but it's actually the 30th. And the far right-hand column is the stock price. So it closed at 467.70. Column right next to it is the S&P 500 ETF and various other data points for the analysis. Now, I'm going to scroll down 52 weeks so we can see what the outlook is, but I did copy all the results and put it in Excel. And after we look at it in the computer modeling software, we'll go into Excel to look at the chart as it's a little easier to see. And we can look out here, 52 weeks, November of next year. It's actually showing the stock price moving up to $557. So somewhat bullish over the next year for NVIDIA. But let's go over to random forest and we'll check out that analysis results. And same thing as of November 30th, stock price 467 and 70 cents. And we scroll down to 52 weeks and we can see out here in November of next year, it's actually a lot more bearish, so showing the stock price just falling under $400. So that would be quite a bit of a drop if that does pan out. But let's move over to Excel and we'll look at these results on the chart. So on this chart, it's the data from the computer modeling software pasted into Excel. First thing I'll point out, the vertical red line, that represents November 30th. So everything to the left in the blue line is the historical stock price, and everything to the right would be the forecasted. But looking at a little history of Nvidia stock price, we can see going back to 2009, the stock was trading in the low single digits, and it had this gradual run up going into 2018, where it got into around the $80 range and then slightly dropped off until 2020, where it started running up again and actually going over $300 in early part of 2022. And if you remember, back in 2022, towards the end of the year, the market dropped, and we can see that here with Nvidia getting down to just over $100 in around October of 2022, and then just running up over the past 12 months, as we saw in the financials. It has great returns over the last 12 months, especially Q2 and Q3 of the current year. But I'm going to jump over to another tab so we can look at the two predictions and the average of the two a little closer. So looking at the M5 rule prediction first, we're going to look at the results, which would be to the right of that vertical red line. And the initial outlook is a drop in the stock price going into January of 2024, but then recovering in the February-March time period. And we can see the stock gaining in price and actually breaking the $500 mark in June of next year, and continuing to increase in value, getting into that 550 range, and actually closing out November of next year just below $560. So if this does play out as shown, that would be almost a 20% gain over the next year. So pretty nice return for 1 year. But let's move on. We'll get random forest. If you recall, that was a lot more bearish. So we'll take a look at that results now. So same thing for random forest. It's showing initial results being a decline, but a lot more dramatic than the M5 rule, and actually getting down to the $400 range in late January, February of next year, and then hovering around that $400 and actually dipping a few times just below it. But then closing out November of next year, again down, actually just below $400, probably in that $396, $397 range, which would be a decline from where we are today, about a minus 14, minus 15%. So definitely a bearish outlook for random forest. But now let's look at the average of the two. I like just seeing that as a for a reference point. So for the average of the two methods, same thing, showing that drop off going into January of next year. But we can see here it does have a recovery, not as significant as the M5 rule, but still recovering those losses that it's showing and actually closing out November of next year slightly higher from where we are today at about $477, $478. So a slight uptick of about 2.5%. So not quite a significant return over the next year if you take the two averages. To recap, the M5 rule prediction is pretty bullish, showing the stock getting up to about $560 by the end of November 2024, while Random Forest is predicting a bear run, showing the stock declining to around $400 by that time period. As for valuation, the stock is currently trading at a significant premium in the high $400 price points, while my analysis shows the intrinsic value from $100 to about $140. Now, granted, I used a 20% growth rate for 10 years, while the previous 10-year net income CAGR was just over 45%. However, this takes into account the two most recent quarters that had explosive growth, helped fueled by the current AI trends. And though AI will probably continue to grow, I'm just not sure it can support NVIDIA having at least a 40% growth rate over the next 10 years. Now, I hope you enjoyed this video and got some useful information. If so, consider subscribing and hope to see you next time.